The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, one would say thanks to the stock market, we had a mostly risk-off type of trading day on Friday into the weekend in grains and in livestock with heavy losses in live and feeder cattle, double-digit losses in soybeans, bean oil as well. Corn and wheat did their best to try and hang on close to the 50-day moving averages here, but all in all, a sad end to the week, which was fairly decent coming out of the holiday. Let's talk about what's happening in these markets right now. Joining us here on the show for a conversation today, Dwayne Bussey with Bolt Marketing. Dwayne, good to catch up with you again, my friend. How are you? Hey,
doing well. Yeah, like you said, it wasn't a great finish to the week for any of the markets, really. But overall, it's been a nice pop. And honestly, one I've been scratching my head on corn and soybeans. I mean, I get the hot, dry finish, but I think we still got some big crops coming out there, Jesse.
Yeah, we have some very big crops right on our doorstep, I would say. I mean, harvest is already ramping up in southern areas, and we're going to see it pick up more steam here in the next several weeks ahead. And, you know, that could be kind of a basis for some of the things we'll talk about here today. I wonder, though, Dwayne, I mean, I'll be curious to see the CFTC report once that's out late Friday afternoon. I've heard some chatter that funds maybe moving some money to the sidelines or maybe moving some money back into the grain market. They've been record short there, or they may be trying to go maybe not long, but get back some position again here and take some money out of the stocks ahead of that projected interest rate cut here coming up later this month. I guess I've heard some of that chatter in the trade. That's maybe one thing I'm watching here as we get into the weekend and into next week, Dwayne.
Yeah, no, I'll be looking forward to that report too. No, I think you nailed it, Jesse. When we got back from the holiday, remember Tuesday was this big up day in commodities and a sell-off in the stock market. But news was kind of quiet. And then all of a sudden you hear about halfway through the day trade talking about this managed funds, how at the beginning of this year, they went long stocks and short commodities in general as like a inflation play, I guess. And I don't know, who knows what they do or why they do it, but they make money doing it, I guess. And they were reversing those positions. Of course, if you reverse that, you're buying commodities. So corn, soybeans, wheat were all higher, cattle higher, and the stock market was down. It was just kind of an odd day. So I think you're right. I think a whole lot of this is this managed money crowd that's been short corn, soybeans, wheat, getting out of those short positions, because also open interest has dropped hard this week and the last 2 weeks on wheat. So yeah, I think you're right. They're getting out of a lot of short positions. And now the farmers should be the natural seller on the other side as they exit those positions. But even the farmers I call and kind of hint like, hey, this is probably a good sell opportunity. We didn't have to do this rally. It's not like we're at $6 corn and $12 beans. You know, yes, we have rallied, but they're still not really happy with this price. We have had some guys hitting the sell button, and good on them for doing it, because I do think this is a rally that needs to be sold. But it's hard to sell it here because you're still looking at like break-even prices at best.
Yeah, and that's the thing. That's what makes it a tough conversation. Break-even prices at best. Some folks maybe want to take advantage, but then some folks saying, well, you know, we're already at these low levels. Maybe I'll hold out and see if we can get a little bit more, which is, of course, that's the dangerous game we play at times, isn't it, Dwayne?
It is. I mean, you're right. What's good is just to have a discussion of it almost every day, market every day. You know, if you decide you're going to hold, that's fine, but make that decision every day. Don't just get busy doing 800 other projects and not even think about markets during the day. And it is a tough call. And maybe I'm right. Maybe we go back and test the lows. So it's a pretty nasty drop from here. But like you said, you're still talking about negative returns, and selling this time of year isn't normally the best time of year to sell either. So it's fine. For me, it was more if you needed catch-up sales. It's those bushels that I know are going to go to town, and I usually pay storage, and I wait and I sell them later on in the year. I don't really want anyone paying commercial storage this year, Jesse, not with these larger crops we've got, large ending stocks. That usually doesn't set up for a quick recovery in the winter. And then so you add on paying 5-6 cents a month commercial storage, your interest costs. I'd rather those bushels be sold, and that's the bushels we were really pushing on this week to make that sale for this pop.
Well, I know we saw delayed a day weekly export sales on Friday. As
Mhm.
again, we've been getting more of this business to China and unknown, particularly on soybeans, corn. Export sales look pretty solid here this past week as well. It's like at these price levels that we've gotten down to, Dwayne, we're trying to drum up some demand, but with that big crop that's out there, you talk about some of those bushels that have to go to town, things like that. I mean, we still got to find someone to buy this grain or find uses for it, and that's been really the big issue for this market all year long, is that we have a huge supply and not enough demand out there.
Right. And great export sales this morning, right? For the
Yeah.
weekly export sales, soybeans, soybean meal. The problem when you look at soybeans is just, man, you just can't catch up from that hole we dug ourselves in. And what I mean by is the slow pace we started. When you're selling close to 2 million metric ton and you still aren't catching up to the normal pace, it's not good. Soybean meal, though, is above the normal pace. So that's great to see, especially for all these crush plants we just built. So, I mean, demand's picked up, but to really catch up, I think what we're going to have to do is sell soybeans beyond our normal export window. And that means getting into Brazil's time of year. And that's going to be tough unless we stay dry down there and they plant the crop a little later. Weather scares are here and there. And I mean, the markets move up and down. But you're right. Good demand. It's just a lot of crop to go. And that's probably why this rally peters out and why we maybe reverse today is it's going to be really tough to rally into harvest because, fact remains, Jesse, are we running out of corn and soybeans today? Absolutely not. Not especially not during this time of year.
No. Well, and as we get into harvest too, I mean, we will look at futures. That's one thing. What about basis, though? I mean, talk about your perspective on what we seasonally tend to get when it comes to basis in a big crop year. I guess I would say I would frame it up that way. I mean, what are your thoughts on what we could see on the cash front here in certain parts of the country as we get
Mhm.
those combines rolling, Dwayne?
It's actually quite interesting because we keep talking about all the old crop that's out there, and the farmers have to sell it, and they just seem not to be. I don't know if they're just building more bins or if the crop's not out there. We'll figure that out later in upcoming USDA reports. But the basis is fairly strong in a lot of areas. I think that's going to change really soon. If it is still in the bins, then farmers are going to take more of this new crop straight to town, right? But the basis has been strong because remember, we never really had a good price this spring, so people didn't contract their normal amount of bushels, and I think that's why the basis is strong. But that crop's got to go somewhere, and when it goes to town, you're going to go from this pretty good basis I'm talking about now to a complete flip. So again, if you're going to sell some stuff at harvest or take it to town, just lock it in right now on this pop. I know it's not the best price, but it doesn't have to be your final price. Because I think that not only will the futures drop from here, I think the basis is going to widen out as well. And actually, even up here in the northern plains, I'm just physically worried about elevators being able to take it. Just space. I mean, the crop is looking that good in most areas that I think they're going to fill the trains that they've got and get full. And then all of a sudden you might see elevators saying we don't have any room, which is, kind of gut wrenching if you got harvest sitting out there, a crop, and you can't get it off. So, another reason to maybe have some more cash sales on.
Yeah, how many piles of grain are we going to end up seeing across the countryside here this year? That's always the fun game to play. And I guess I would maybe frame it up this way too. I love your perspective here, Dwayne. I mean, you mentioned, okay, it's not a great price, but maybe if you know you're going to be taking this to town, lock in some price floors here, some puts, things like that. I mean, at the end of the day, it's no secret that nobody really loves these prices, but
Right.
managing your risk here somehow, some way has to be important here to make sure you're at least, carrying into 25 and moving forward to some degree, right?
Yeah, absolutely. And I'm glad you mentioned the put option strategy because a lot of times puts kind of get a bad rap or not a bad rap. They're just expensive. If we're
Mhm.
looking at high prices in May and I mention a put option to somebody and they're like, whoa, it costs that much. Well, that's because of time value. There's not a lot of time value to new crop now. So you can buy some short-term put options for the stuff and get through. Like you said, buy yourself, if nothing else, it just buys you some time. And the reason I like puts is because, like you said, nobody likes the flat price, right? Well, put options give you upside potential, but have that like insurance type system as a floor. So that's a good way to go. Like you said, I like straight cash sales. And just like for the soybean side of things, I just look at that ending stock, and like we mentioned, good exports lately, but we're still behind pace. We've talked about the heat, maybe taking the top end off the yield, right, Jesse? But I'm afraid even if you do that with the poor demand, I think our ending stocks continue to grow in upcoming USDA reports. Maybe not next week, but the month after, and that's not a bullish setup then. And I'm gonna mention one more thing about those yields we're talking about coming off the top end. I won't argue with that. I think a hot dry finish has probably trimmed some bushels off. But what number are you coming down from, Jesse, is really the question. With so very little drought in the U.S. this year. I mean, I'm going to get like shot for saying numbers like this, but are we messing with a 188 corn yield and we're trimming off the top of that, or messing with a 56 soybean yield and trimming off the top of that? I mean, remember, that is a possibility out there. I'm not going to try call for that, but it does look like a lot of good crop out there.
Very, very true. No doubt about it. We're talking with Dwayne Bussey from Bolt Marketing here today on the program. And Dwayne, we think about, the weather, maybe trimming some of those yields you're talking about, and the potential that's out there. And at the end of the day, I mean, we can guess all we want. We're never really truly going to know a final number. I mean, that's the thing that I always want to put into perspective here. I mean, those yield monitors will roll, will get close. And I always enjoy looking at social media, for instance, and seeing people, talking about, well, this survey's got this state way out of proportion. That crop's not there, things like that. And so I get that. And I know that there's a lot of that fodder out there, but also there's another piece to this too that I think is important when we think about risk management, and that's the making sure you educate yourself with the tools that are out there to work with. We got all these estimates floating around. It affects the psyche of the market, this and that. But then at the end of the day, if you don't know all the tools available to help manage through this cycle in this environment, that's a problem. So I would say you need to get educated or work with someone you trust that can help you navigate this situation. Right, Dwayne?
Yeah. Oh, 100%. And I still think your number one tool is called a spreadsheet. Just know your costs and at what price do you make money. And this year, maybe breaking even is okay. I mean, any of us who farm long enough know that you don't make money every year. Otherwise, everybody would be farming, right? Because it is a fun job. I love doing it too. And break even is maybe just fine. And like I said, when I looked at our farm and, potentially some higher yields, the rally this week got us up to break even. So maybe that's good enough this year, and maybe you'll feel better about it. Yes, it's not $6 corn, and no, your wife can't drive that new Yukon next year, but I mean, it's all right for a year to just break even, I guess. So I'm still saying the spreadsheet's still your sharpest tool.
Well, and having that spreadsheet, not only getting through this 24 crop, but also looking at 25. And I know that this recent rally's helped some of those price levels, but at the end of the day as well, that's a really hard conversation to have because input costs have not come down. And I know there's a lot of folks who are concerned about 25 because of just the price imbalance, I guess, between commodity prices here and input costs up here. Right.
And because of that, I'm not pushing hard on the 25 crop yet. If I'm just being honest, because most of the guys I talk to are so undersold on the 24 crop. I'm like, well, let's handle problem number one first, and then we'll move to problem B. But yeah, it's a better price, so maybe it's okay. And one thing I will say too, and this will get everyone off my bearish attitude, is that whenever I seem to get this bearish and doom and gloom of like, wow, we got this big crop, and then next year, if we have even more corn acres, what's going to happen? Usually whenever I get that way, Mother Nature decides to do the, oh, you think you know where we're at, watch this, and throw something our way. Now, and that being said, it can happen here, a drought could happen in Brazil, and it would just change these markets dramatically. So I'm not hedging hard on 25 just because I screwed up on 24. But moving forward, I will have, marketing plans in place on my spreadsheet of sell here, make your $30, $50 an acre profit, things like that. So yeah, not aggressive on 25 yet, but we'll have a plan in place for sure.
And you mentioned Brazil. I'll throw Argentina in there as well. It is very early, but a lot of the early talk is dry, dry, dry. And I know we got a ways to go in South America. They're just getting started, but that might be the weather story to watch here for the next several months ahead, Dwayne.
I know. I mean, I'm poo-pooing it a lot because it's their dry season.
Yeah.
And it's a stats thing. You know, if you remember from stats class, you know, during their dry cycle, it's a percentage thing. You know, maybe Brazil's only supposed to get 4 inches of rain, but they only got 2 inches this dry cycle. Well, you know, social media jumps out there with it's, you know, 50% worse than of the normal rainfall, you know, and well, that 50% sounds a lot worse than 2 inches short. So maybe do some math there too. It's probably not as bad as we think, but it's not what I think, and it's not me running stats and playing numbers. If the funds that we talked about earlier, if they're short the market and that drought snowballs and they don't want to be short anymore, well then by God, all my bearish news goes out the window and we will rally. The only thing on that rally is, you know, if that happens, the funds could get out all those shorts and the farmer is going to be there to sell and we're not going to rally back to $6. So have that marketing plan, that risk management you've been talking about, Jesse, of where you want to sell this crop if you do get lucky enough to have a rally like that.
How about the livestock trade, Dwayne? Tough end of the week in cattle and hogs, cattle in particular, 2 days in a row of downward action. Feeders taking it on the chin, for instance. What's your attitude towards this cattle market here right now, post Labor Day?
I've been a little bit bearish the cattle market anyway. It's kind of the trend. A couple things. The biggest thing for me is these carcass weights, Jesse. Every bull is going to tell you all the inventory is so low, the cattle aren't out there. That's true. But as every steer that gets slaughtered has got 36 extra pounds of meat on it, we can go a long ways without the numbers, I guess is what I'm going to say. But boy, we got hit with some nasty news here late this week. You know, a case of anthrax in Wyoming. I can go into details there, but it's just never good. You know, anthrax is kind of, I think there was a case in North Dakota this summer too, and there was no mention of it. So it really just depends on how the media spins it. Now, I think on this side, for this case, somebody who was talking to the media about it made it sound like, well, you know, anthrax, you know, can go to humans. And it's like, well, no, it's not contagious. So it just got spun off negatively. So down the market went. And then we also had cash cattle a little lower this week, 180 to 183, I'd call it. So, you know, the futures market maybe is down a little bit lower, and it has to because of that. But yeah, time of year. And then, of course, haven't even talked about all the economic data this morning that came out, right? So stock market down hard, dollar down. That's never a good thing for the cattle market either. So that's probably also why we sold off today.
Well, and I would throw hogs in there too. I think that got caught up in some of that same action as well. And I think hogs have kind of been working a little bit with cattle. And it was interesting too, just to end the week here as we kind of wrap up the proteins, that it felt like we kind of had a divergence away from proteins following stocks for a part of August, but now kind of going back to that again. I find that interesting, Dwayne.
Well, my cattle guys will tell you it only matters when it goes down. It doesn't matter when the stock market goes up. And I hear them crying there too. It does feel that way at times, but we still hear too. There's a couple things we should concentrate on. The inventory is low, and we're not rebuilding this herd. The price is too high for guys to hold back heifers. They're making too much money. So in 2025, I'm going to be friendly the cattle market again at some point in time. I'm just following the trend right now and the seasonal tendency. It just seems to be bearish right now, but long term, cattle are still going to be a good commodity to own.
Final thoughts that you would have for folks listening in here today, Dwayne?
I guess my biggest thing is I know today you're going to look and see corn down, 5 to 7, beans down close to 19. You're going to think, oh, I missed the pop. Look at a chart. You didn't miss it. We rallied a long ways here, and we're just up towards the top. This is actually really when we should be selling. Once you see the top kind of turn like this, and maybe it's not the top, but go back to your spreadsheet. And if it is break even and you got bushels that have to go to town, maybe it's okay to just let them go. You got other bushels you can store on farm, and we can cheer that the market goes higher for those.
Dwayne, if folks want to reach out to you there at Bolt Marketing and get some advice, what's the best way to get in touch?
They can call us directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always good to talk with you, my friend. Thanks for being with us here on Market Talk today.
Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.